Hello, everyone. I appreciate everyone joining. We'll give it just a few minutes to kind of let everyone get logged in. As we get started here, I would love to see in the chat, where is everyone from? Where are you joining from? What state are you in? I see Orlando. Where else? Where's everyone else joining from? Outer Banks, North Carolina. Is that where the show is filmed? I've seen the show Outer Banks. I've not watched it, but I've seen it. Vegas, Texas, Florida. Fort Bragg, awesome. I'm in Salt Lake City, Utah. So looking at this, we've got the entire country covered, it looks like. Hawaii, man, from Hawaii. Okay, you're probably the farthest one thus far, and I would absolutely trade you. You can come to Utah, I'll go be in Hawaii. Sounds great to me. California, fantastic. I appreciate everyone joining. I'm super excited. I'm going to share my screen here in just a moment. To quickly introduce myself, my name's Cody with Prime Corporate Services. We are a legal, financial, and tax firm. I'm excited to chat with you guys about entity creation, tax mitigation, really just the creative ways that you can ultimately protect yourself and keep your money in your own pocket. And I want this to be as interactive as possible. So as we go through these things, I understand they're complex topics we're covering. So please ask questions. We're going to have plenty of time at the end for a Q&A. So if you have questions as we go through it, drop it in the chat and we'll make sure that we come back and answer it. But I'm excited to dive into this and hopefully get you guys on the path of, asset protection and tax savings. So I'm going to share my screen and we will dive into it. So first and foremost, right out of the gate, I do want to let everyone know that out of all the slides we're going to go through, there are a lot of examples in here. The examples are just that. It's examples give you context. So just know the numbers that we discuss, these are not based on anyone's income levels. This is really to show you how all the components will work together. And then again, just some background on who Prime is. So we've been in business for since 2012, about 180,000 businesses formed, 100,000 taxes prepared, about 15,000 estate plans completed. And something that I am very, very proud of is a 4.9 rating on Google with over 15,000 reviews. So this is a space we're very comfortable with. Like I said, please ask questions as we go, right? That's obviously what this is for. So the purpose of today, I want to go over, again, the most recent tax reform. We'll touch on our business credit profile, the tax advantages, and ultimately, like I said, just make sure you have the correct foundation laid as you're beginning this new journey. So starting first with our tax reform. If anyone remembers in 2018, when the Tax Cuts and Jobs Act happened, that was the biggest tax reform that we've had since the 1930s. And what it really boils down to is in order for somebody now to go and operate in any type of self-employment sector, we now have to show legal intent. Now, that does not mean that before 2018 you could illegally do it. All they're saying is, look, if you want to be self-employed, you still have the same right. We just have to legally start our business, right? Pretty straightforward. So there are, as with anything, there are multiple ways you can actually structure your entities. One thing that we recommend is to first start with setting up a holding company. A holding company is an LLC that is set up in one of the 4 haven states that you see here. So either Nevada, Wyoming, Delaware, or South Dakota. What the haven states do for you would be 3 things. Number 1 is this gives you the maximum asset protection. So the corporate bylaws in these 4 states are the best in the country. Okay, so they give you the best protection. Second would be the tax advantages. This type of a structure ultimately simplifies your accounting. I'm going to go into a lot more detail. The structure really just keeps your accounting very, very easy. And then third, which is probably most important for me, is the privacy. So for example, let's take South Dakota. They're referred to as a non-disclosure state, which means they don't list your name on public record as being an owner or a member of the holding company. Now, in turn, the holding company is a non-income producing entity. So you're not completing any transactions at the holding company level. You're not holding properties in it. Its only purpose really is to remain in the background and take ownership over other businesses or other entities, other LLCs. When structuring those subsidiaries, rather than listing yourself personally as the owner, we would list the holding company. So in turn, no matter what state your subsidiaries are in, they adopt the same benefits as the holding company, right? They would still get the same asset protection, the same tax advantages, and the same privacy. Now, I want to go a step further and actually dive into, there are 7 functions that make up an LLC that we'll look at one at a time. So number 1, right out of the gate, is the legalization. And when I say legalization, what I mean is filing all of the documentation through both your Secretary of State and the federal government. And the reason that legalization is listed first goes back to that tax reform, that in order for someone now to operate in self-employment, we first have to legally do so. And then number 2 is probably the most popular piece of an LLC, which is separation and protection. So the LLC is what separates you, along with any of your personal assets, from any type of liability from the business. So if somebody claims, that you got them sick or injured, the last thing that we would want is them coming back and attempting to sue or try to liquidate you personally. Okay. Now, these first 2 are strictly the fundamentals, so it makes no difference what industry you're operating in. When setting up an LLC, number 1 and number 2 will always be the same. So where LLCs differentiate from one another is number 3, which is the operating agreement. Now, the operating agreement is an internal document, anywhere between 7 to 10 pages typically, and it outlines everything you see here. So it talks about ownership percentages, it explains the different rules, regulations, provisions. More importantly, the operating agreement is also what gives you your legal tax status. So that is what designates and explains the industry that you're operating in. Now, number 4 are the tax deductions, and this is where we kind of get into some of the fun stuff. So there ends up being over 250 sanctioned deductions. So 250 individual deductions. And this list is really just scratching the surface, but paying for portions of your own rent or mortgage, paying for travel expenses or cell phone bills, educational costs, all these different things now become tax deductible. So along with us at Prime, obviously, setting up entities, we also have our own in-house tax division. Okay? And all of our clients, I have something pretty special I'm going to share with you guys where we're going to get everyone booked for a one-on-one individual consultation where our team will really talk to you about, how to track your expenses properly, right? What to keep record of. We'll talk to you about the different, mitigation strategies you can start using. And ultimately want to really figure out a way to where we can keep your money in your own pocket rather than you making money and then it just going straight to the IRS. I'd rather see you keep it with you, use that to help grow and, build out your portfolio. Right. The 5th function is the pass-through taxation. So an LLC is also known as a pass-through entity or a flow-through entity. Essentially what that means is everything passes through to you as the individual. Now, within that, you get pass-through taxation, which the by-the-book definition is it allows us to apply all deductions against all income. Okay, to apply all deductions against all income, meaning when you sit down to file taxes, you're still doing one filing, but it includes both your business tax and your personal taxes. Everything gets done together. And doing it this way actually allows us to apply those, 250 different business deductions against your overall gross income across the board, whether it's from your W-2 employment, if you receive 1099s or pensions, or for individuals that are married filing jointly and say your spouse has personal income. Well, if you file jointly, you get to apply your deductions from your LLC against even their personal sources of income. So it's a very, very unique tool to use. And to even go a step further, if we look at the 2 examples on the screen here, we'll focus on the top example first. This is somebody who is a single filer, so not married, and they do not have an LLC in place. And we're going to say for conversation's sake, this person makes $65,000 a year. When tax time gets here, all they can really do now is take the standard deduction of $15,000. So in turn, you'll notice that they lower their taxable income to $50,000. But at a 26% average rate, 13 grand, give or take, still goes to the IRS. I'm sure we can all agree that's not the most ideal situation to be in. Right now, looking at the bottom example, the same case study, so the same person, we've just now structured an LLC. So a few things to point out is this person still brings in $65,000 a year. Okay? They still get the same standard deduction of $15,000, but then they also get to apply their big deductions. And let's say hypothetically this person spent $10,500 on their business. Well, now you'll notice their taxable income gets brought down to $39,500. But in turn, that also moves you into a lower tax rate, now 19%, and now only $7,500 goes to the IRS. So all in all, for this example, this person, this ends up being about $5,500 a year of tax savings, regardless of whether or not they've even generated a single dollar yet, right? The deductions are immediate and they get applied to the overall income from each source, which again is a great way to keep your money in your pocket where ultimately is where it needs to be. The sixth function would be your startup provisions. So for example, making a financial investment into an educational platform or a mentorship or traveling to a seminar circuit, by default, these types of investments, traditionally, the IRS would categorize them as being an educational expense. However, once you have your LLC and your entity structured, now we can step in and we can actually recognize that as being a legal business startup expense. And in turn, that actually allows it to become 100% tax deductible. Now, we want to be creative, we want to be aggressive and ensure that we can push as much into that startup provision bucket as we possibly can, because that allows you to write it off as a dollar for dollar deduction. A huge benefit with startup provisions. And then last but definitely not least, number 7 is compliance, which compliance is the business's stamp of approval. So it's a federal compliance that we obtain through your EIN number. And there are a few places you'll use it. For example, when you're setting up like business bank accounts, working with maybe contractors or clients or just anybody that ever needs to verify that you're a legal, legitimate business, compliance is how they do so. So to make it easy, we obtain it for you right along with the LLC. So relatively straightforward. Now, I do want to pause for just 1 second. Whoops. Sorry, let me just stop this share. And first, I just want to see some of these questions in here and just make sure that I'm not missing any questions. Uh-oh. I see some people in the chat that looks like it stopped. Hopefully it's working. I apologize. Let's see, North Carolina who lied for us. Yes, sorry, Gigi McKinney. Number 4 was the tax deductions. There are over 250 sanctioned expenses. North Carolina, who won't allow you to form an LLC and pay yourself as a broker without a firm license. BIC. Yeah, Stephanie Martin's asked, so what is the answer for states like North Carolina who won't allow you to form an LLC to pay yourself as a broker without a firm license, and a firm license requires a firm BIC? Yeah, unfortunately, that's a tough one. There could be ways that you could get around that. Again, I'm going to share a link with everyone to schedule a one-on-one consultation. I would need to get some more information. That's a more in-depth conversation to dive into. But I work with clients here in North Carolina all the time, so we set up plenty of entities there. So there are some ways we can work around it. And then another question that just came in. So from Anne Marie, is this better than a sub S corp? Also, which state does not divulge who the owner is? So when talking about the S election, it really depends. I'm not going to say that it's better or worse, because having the S election really depends on the type of income that you're generating and the amount. So an S corporation really only benefits you for active sources of income. And then you could probably ask 10 accountants and get 15 different answers that the dollar amount that you're generating. I usually say if you're above 40 to 50,000 a year, an S corporation can make sense if it's active income. But the other beautiful thing is transitioning from an LLC to an S corp is so easy. It's one form that you file. So I always recommend to first start off as an LLC, regardless of what type of income you're generating. And then as things progress throughout the year, you can make the change to an S corp at a later date, which is very, very simple to do. Great. Great questions. Now, if you guys are good, I want to keep going, and I want to, oh, sorry, I guess I was still sharing. I'm going to dive into some of the business credit. Okay? Now, building business credit when you first set up an entity is extremely important. And we have a credit profile that you can build with your business. So if you're familiar, we all probably are aware of what our personal FICO is, right? Your FICO is your personal credit score. When you set up a business, you can actually establish a PAYDEX credit score. FICO is personal, PAYDEX is business, but they operate almost the same way. Now, there are some inherent differences. So for example, your PAYDEX score is something that under no circumstances will never automatically or inherently be given to your business. So you have to go through certain steps and parameters in order to establish it. When we say that, it's not rocket science by any stretch of the imagination, but it is a process. And then also where they differ is just simply the way they're built. So your FICO score will range anywhere from 300 to 850. And if somebody has a 780 or above FICO score, you're in the excellent range where obtaining credit really is no issue. On the PAYDEX, however, the score ranges from 1 to 100. And if your business PAYDEX score is at 75 or above, you're considered excellent. So the goal is to get your business to a score of 75 or higher, because once we accomplish that, your business is actually now referred to as being a self-sufficient business, meaning your business is now on its own 2 feet financially. So it is operating on its own, it is more importantly funding on its own, and you're now utilizing business lines of credit and corporate funding. You're not using your own personal capital or your own personal credit. So imagine with getting into a property and you need to either like remodel a bathroom or replace windows or need to further your education, whatever the expense could be, rather than you being the personal bank and just digging into your own pocket, right? Your own savings, your own credit, let the business fund itself organically by building a business credit profile. Now, there are 2 federally sanctioned credit profiles really for this reason. On one hand, you have personal, right? Your name, your social, and in turn, your FICO. On the other hand, you have the business, which would be the LLC, EIN, and in turn, the PAYDEX. The goal with this is we don't want one to have a negative impact on the other. I see it happen far too often where somebody starts a business and their idea is to self-fund it, which is great in theory. However, if you keep using your own personal credit card and eventually it destroys your personal credit, and then the business ultimately does not transpire to what you want it to be, you're kind of just left with ultimately nothing except as a destroyed personal credit score. If we can separate these two and let the business fund itself organically on its own, that's where, again, I say you can really step away from being the personal bank to this venture. So one of the other unique things is when you're very first starting out, right? When somebody invests into like a mentorship or an educational platform, 9 out of 10 times you're digging into your own pocket and you're using your personal credit card or your personal savings to make that very first investment. Well, 2 things happen here. Once we set the LLC up, the startup provisions will allow us to write that investment off as a dollar for dollar deduction. The second thing is once we can actually recognize that as being a legal business startup expense, we can then step in and we can shift that debt off of you personally, off of your FICO or your personal finances over to the business PAYDEX. In turn, what happens there is you get yourself out of the red immediately, and now your business is housing its own debt, which is ultimately where it needs to be anyway. So I'll kind of walk you through some of the steps it actually takes to build a credit profile. So in the beginning steps of building business credit, what the banks really primarily value up front is your personal debt loads and debt ratios, right? They want to make sure you have a fundamental understanding of how credit works. So they're going to look at, do you personally have major credit cards? Do you maintain your personal credit score? They're not doing a credit check by any means. They're not worried if you have a mortgage or auto loans or if you have student debt. None of that really comes into play. It's more they want to understand, do you fundamentally know how credit works? Right? And then once we get into the steps, and this is what our team walks you through step by step, right? This is done in a one-on-one setting over the course of a 12-month period. So the very first step is to establish your PAYDEX profile. Now, a few things have to happen. We've got to make sure that you have all of your business compliance completed. So making sure your LLC is set up, make sure you have your EIN number, your compliance, making sure that you're bankable from a business standpoint. And then, of course, creating a Dun & Bradstreet profile. That's what actually gets your credit score in place. And then number 2 is to build. We've got to build that score now to 75 or above, to the excellent rating, which is all done with utilization. So when you get your score in place and then you get your what we call a tier 1 account, and that could be something simple like a gas card or like a Granger, a Uline. And as you make purchases and then pay those back over the next 30, 60, 90 days, in turn is what increases your score to 75 or higher, just like you would build or rebuild your personal credit. Okay. Third step is then to shift, meaning we're shifting any of your business's existing debt off of you personally over to the business paydex. Now, I will tell you there are a plethora of different ways we can complete the shift process. For conversation's sake, the easiest way to think about it is a balance transfer. It not only shows great for your personal payment history, but again, that is what actually separates your financial liability. You're no longer housing all of this, quote unquote, business debt on your personal credit or your personal finances. And then number 4, finally, is receive, meaning your business is now receiving paydex funding. So in the future, when you need capital, whether it's for, again, materials for a rehab or marketing, education, whatever the expense is, right? The sky is really the limit. At that point, it's not even a thought that should cross your mind to go and dig into your own pocket, right? The business is now funding organically on its own. Again, you are no longer personally financially liable for the business. Okay? So again, building business credit is very, very important. And one other thing that I will say is the number 1 cause of business failure within the first 12 to 24 months has been and probably always will be lack of capital for reinvestment. Business owners simply run out of money. And when that happens, if you have nowhere else to pull capital from, you're kind of stuck. So if we can eliminate the number 1 cause of business failure by building a business credit profile, that's what gives you the best shot at longevity, because you're not ever just stuck to your own devices, so to speak, and digging into your own pocket. The last thing that I want to touch on really quickly, I'm going to skip a few slides here, and I want to touch on estate planning as well. So unfortunately, we all know that we're not going to live forever, right? It is unfortunate as it is. So estate planning becomes very, very critical. Now, these 4 components you see here are what makes up a completed estate plan. Now, whenever you talk about estate planning, the overall goal really is to avoid probate at all cost. If anyone out there has gone through probate, or if you've had a loved one that's had to go through probate, you know that it's a lengthy process and it can be expensive. By having an estate plan in place, you get to avoid the probate process. So the trust comes first, and the trust is the instrument that actually allows us to avoid probate. Within the trust, you have your will, right? Your last living will and testament, where you outline all of your afterlife wishes. So who you want to leave assets to, if you have children under the age of 18, where you want to leave your kids to, it's all outlined within the will. A living will is a health directive, and that allows you to kind of determine to the world what you want your final chapter to look like, so to speak, whether it's artificial life support, if it's a do not resuscitate, all outlined in your living will. And then finally, there are power of attorneys. There's both a medical power of attorney and a financial power of attorney. That's just somebody you pick that can, speak to doctors, figure out a care plan, or someone that can cash checks, pay bills, make sure your financial life stays intact while you're focusing on, either rehabilitating yourself or whatever the case is. Now, there are no 2 estate plans are the same. What's important to me and my family is going to be different than what's important to you and your family. That's just the reality of it. So an estate plan is something that, aside from these 4 components, is customized completely to you. I'll give you just a very quick example. I have 2 daughters that are 11 and 13. So for anyone out there that has daughters that are in their preteen and teenage years, first, wish me luck. No one's burned our house down yet, but a lot of emotions at my house right now. And my wife and I, of course, as parents, we all kind of have conversations of, if something happens to us, who do we trust? Like, who would raise our kids for us? I didn't know until my career at Prime that if that's not outlined in my estate planning, that does not necessarily mean that's what's going to take place. Right? We had a conversation with my sister-in-law, and she agreed that, yeah, she would take our kids if something happened. But then it comes in turn that if that's not outlined in our estate planning documents, my parents could contest that, my in-laws could contest it, my sister could try to, it just becomes ultimately a fight where my kids are kind of left in limbo until that probate process is completed. So getting it outlined in your estate plan is very important, so that whatever your wishes are actually what's going to be taking place. Okay. Now, to bring all of this full circle, again, the 4 components that we primarily focus on: be the entity formation, so we can set up LLCs and corporations in all 50 states. Our business credit program, so we can help you build the business credit profile from scratch all the way through the excellent rating. We do the estate planning, so setting up the trust, the will, living will, and power of attorneys. And we also have an in-house tax division. We do both business and personal taxes. Okay. What I always like to show is kind of just how the whole gamut of things come together. Now, you'll notice at the top where it says the structure is a living, breathing organism, which means it is going to change over time. Now, this is not, you don't take one swing of the bat and knock this structure out. It's something that you build up to over time. This kind of shows you the flow of how everything works. The holding company would own any of the subsidiary LLCs. The trust takes beneficial ownership over the holding company. So in the event, if you have a structure like this and something were to unfortunately happen, everything funnels upwards, defaults all the way back into the trust. And then in your will, you can explain exactly who you're going to leave your properties to, any of your assets, kids, bank accounts. It's all spoken for, all very cleanly done for you, so you know exactly where everything is going. I hope that all makes sense. I know we covered a lot of information in a short time. So again, I'm going to stop my share and go back to some of these questions. So again, I appreciate you guys. Let's see. What is the difference between Paydex score and a Dun & Bradstreet? So that's a great question. So really there's not. So Dun & Bradstreet is the reporting agency. The Paydex score is the technical name for the profile, just like your FICO score is the technical name for your personal credit. And then like Equifax is the reporting agency. So they work together. Great question. Let's see. Yes. Okay. So Brandy asked, what are your fees for all this? That is a fantastic question. So I have a link that I'm going to share for everyone. This link, what I'm going to do is we're giving everyone a complimentary one-on-one consultation. In a group setting, it's great, right? I mean, obviously these questions are fantastic, but I've done this long enough to know that there are some questions that you just don't feel comfortable asking in a group setting. So in this consultation, which Tyne just shared the link, book a call with our team, right? You have nothing to lose. It's scheduled for an hour. Our team will deep dive your situation. We'll tell you, make recommendations or help you perfect. Even if you have a structure in place, still book a call. There's still things we can help you out with. And our fees, I mean, it's depending on what we set up for you, it could be anywhere from a few $100s to a few thousand, depending on what it is. But the consultation is completely free. There's no obligations to anything. You're not required to do anything other than bring a pen and paper, and we'll have a conversation, make sure you're going in the right direction. GG McKinney, yeah, absolutely. We are more than happy to help you out with setting all of this up from top to bottom. What about new Florida regulations? Carla, I'm not familiar with any of the new regulations in Florida. The only one that I've heard that was new was for the registered agents, but that's pretty typical. Most states do that anyway, but I'm not familiar with anything else. So let's see. Okay, Gloria says, did the volume of transactions or revenue matter aside from the 12 months of the LLC tax rate? Do my tax rate automatically go up? So Gloria, I believe that you're referencing the slide that I showed where it had the flow chart. The difference in the tax rates was long-term versus short-term, right? Or passive versus active. So it just depends on what type of investing that you're doing, what kind of properties that you're holding. But the goal is, by having the LLC in place, is to get your tax rate as low as possible, which is obviously where we want to be aggressive. No, Brand, if you already have a consultation set up tomorrow, keep it. Absolutely. Matt Martin is fantastic. He'll take really good care of you. But no, you're completely fine to keep that consultation. Just let him know you were on a webinar with me. He'll take good care of you. For the LLC and holding companies like the mother account. Nope, doesn't make a difference. Lori, great question. And you guys feel free, man. I've got the next, 30 minutes or so, and I'll hang out for as long as you want to. So feel free just to fire away with questions. I'm more than happy to answer anything I possibly can for you. And just make sure, again, that you're going in the right direction. Okay, so Nancy asks another good question, asking if we should set this up for each property. That is a very common question that I get, and I'll tell you it's not a one size fits all answer. Really, it comes down to your own personal risk assessment. I have some clients that will do one LLC for each property. I have some clients that will put 3 to 5 properties in an LLC. It's completely up to you personally. If you're asking my opinion, I think one LLC for each property can be overkill. But if they're in different states, if you had one property, let's say in Utah and one property in Arizona, then you would definitely need 2 LLCs because the properties are located in different states. But if you have multiple properties in one state, you can put them in one LLC. Anne Marie, I've been thinking of closing my sub S corp. So Anne Marie, it's a great question. Again, I would book a call and let our team deep dive it with you just to ensure that closing the S corp makes sense. Again, depending on what kind of income you're generating, it could make sense to have a dual entity structure where you have the S corp along with a holding company. It's situational, but it's worth the conversation for sure. Gloria, I already have an LLC subprime. Yeah, Gloria, book a call and our team can talk about the business credit, even if we've already set up an LLC for you, or you can go back to your corporate advisor or strategist who helped you the first time. But yeah, I would definitely book another call. So each property should have its own trust. So Susan, each property having its own trust, I believe you're talking about a land trust. The reason for that would be for privacy, but you would get that with the holding company and subsidiary structure anyway. So I wouldn't say that you're not necessarily wrong by any means. You could do that. I feel like it's kind of, again, just overkill to have a land trust for every property, but it could work. Yeah, Ken, so your accountant is correct. An LLC, because it's a pass-through entity, it flows through to your personal tax return. Right, it's just on a different schedule, but that is absolutely correct. And Carrie, yes, we can do, so our team, we're licensed across all 50 states. So no matter where you're located, we can help you out with taxes, with structuring the entity. Our clientele is from coast to coast. Stephanie, okay, what is the difference between the LLC and the holding company? Great question. So the holding company is an LLC. It's just set up in one of those 4 haven states. That's what makes it a holding company. And then also with that, you're not doing any business out of it. Its only purpose is once it's in place, it remains in the background and it takes ownership over other businesses or other LLCs. So it's in place just to simply take ownership over other LLCs. Let's see, you teach the process of payroll and the final. Lynn, I'll tell you, payroll is it's a whole different animal. It kind of depends. If you have a single member, say an S corporation that's just you on it, no employees, then we can assist you with the payroll taxes. If you have employees, there are firms out there like Gusto or ADP who actually specialize in payroll, and that's where I would suggest that you look. So we can, to a degree, we can assist, but it kind of depends on what the situation is. Carla, I have an LLC for online business, but I want to close the business and reuse the LLC. Can I use it for other purposes? So Carla, that's a great question. When you already have an LLC in place, wanting to reuse it for something else, it kind of depends. If you've had the LLC open for a while, let's say if it's been in place for a couple of years, and you're starting something new, my advice would be to start a new LLC. You want to get back into that startup phase so you can take the 100% deductibility. If your LLC has been in place for a few years, you're unfortunately out of the startup phase and you unfortunately can't take the startup provisions. So again, it just depends. But typically I would say for a new venture, your best bet is to start a new LLC. And I want to share this link again with everyone just so you have it down here. But if you copy and paste that link into your browser, you can book, like I said, the complimentary consultation. There we go, perfect. And my team, I've got about 60 corporate strategists here that are more than happy to walk you through everything and answer any of the questions that you have. And again, just make sure that whether you are brand new and you've not done anything other than this is joining a webinar like this, or if you're a serial entrepreneur that has multiple entities, I promise you we can help you out and just make sure, again, that questions are answered, you understand the structure better, we can help out with the taxes or the estate planning, we can just make sure you're going in the right direction. Any other questions? We'll give it just a few minutes in case anyone's typing. What are the total range of services you offer? Sorry, so Stephanie, just to make sure I'm following correctly, are you asking like the 4 different services we provide or what the cost is? I opened it in June 2025. So yeah, in that case, being that it was open in 2020, I would say just dissolve it and set up a new one. Honestly, it's probably your best bet. Rather than trying to like go through a restructure, I would say just dissolve it and start fresh. Thank you, Phyllis. I hope it was informational. Hopefully I didn't muddy the waters for anyone. Hopefully you got some clarity right. But again, please book a call. Our team would love to chat with you. I'll sure we should have an additional member on the LLC. So Nancy, that's not necessarily true. So having an additional member on the LLC, making it a partnership, I mean, in years past, I could see that, but now that's no longer the case. A single member LLC does everything for you that a multi-member would. So no difference. You're fine to do as a single member. Is there any financial planning, etc.? So, I mean, to a small degree with our credit program, but they're not really focusing on like anything personal. It's more for the business related, where we can give you tips and tricks. Our tax division, we have something we call our tax vault video series that has about 25 or 30 like tax mitigation strategies. I know one of the items in there is around like financial planning and how to like pay off debt for businesses and such. So, I mean, I guess to a small degree, Stephanie, but I don't know how in depth you'd be looking, but to a minimal degree, yes. You guys have been great too. I appreciate it. I was thinking today, I think this is the 3rd or 4th time I presented for this group, and it's always a very interactive conversation, which I appreciate you guys welcoming me back. Like I said, I'm more than happy to hang out until the top of the hour and answer any questions I can, but I strongly advise everyone book a consultation. Like I said, you have nothing to lose. Our team is more than happy to answer any questions we can and just make sure you're going in the right direction. I'll give it just a few more minutes to see any other questions pop in. Not seeing any new questions. So with that, then I appreciate you guys letting me come in and chat with you. Hopefully, again, like I said, hopefully I clarified some things, hopefully cleared up, any questions you had. Like I said, I'm definitely not hoping to muddy the waters at all. Would we owe anything like our HOA property? Nancy, if you can expand on the question, I want to make sure I follow what you mean. I wonder if are you referring to like if you had the structure with privacy, if you would still show ownership of anything? And if that's what the question is, I mean, you absolutely would, yes. So I mean, it depends on what it was open for to begin with. Yeah, so I mean, that is Nancy, that is a strategic way that you can go about that. That's where obviously estate planning comes into play. I would definitely book a consultation. There's a few things to dive into with that, but yes, I mean, that ultimately would be the goal, is to strip the ownership, but there are some things obviously you need to show ownership on. So, but yeah, it definitely can work that way. Good. All right, guys. Well, again, I appreciate you letting me hop on and chat with you for a little bit. Please book a call with our team. I promise they'll love to chat with you. They'll make sure that any of your questions that you have, anything that I didn't answer, any other questions you do have, they're more than happy. They're waiting and willing to hop on. But other than that, you guys enjoy the rest of your day, and we look forward to chatting with you. Thank you.